It has been a while since I covered these type of ETFs. Brompton enhanced the multi-asset income ETF, BMAX. The reason I'm talking about this one is because BMAX, as of today, guys, is at all-time high. If we look at the chart right here, see, it started all at $12. Right now is at over 13.74. 52 week range is between 11.20 3 to 13.74, which is today. This is the highest has been. And we look at the daily total return for this year to date has returned about 12%, and yield right now is about 9.36. So I'm going to give you a little description about this fund and see if Brompton Enhanced Multi-Asset Income ETF is a fund for you to invest right now. If we go here, we can see the full name is Brompton Enhanced Multi-Asset Income ETF, or BMAX. Management style is active. And I'll show you a bunch of ETFs that it's invested. This is fund of funds. It's a pretty good. It doesn't pay as much, but you will see the chart, man, is going up. Because it only pays about 9%, 9.15, of course, at these prices. But if you bought our 11 when it was at the lowest, I think it went all up to 12%. So now, overview of this fund for people who don't know about Brompton. I covered this ETF. I talked about before, maybe last year or when it came out. Brompton Enhanced the Multi-Asset Income ETF is designed to provide attractive monthly distribution and opportunity for capital appreciation by investing in a portfolio of Brompton ETF and preferred shares. So it's a invest in the funds that Brompton holds, so in-house funds, by combining multiple investment strategy diversified by geography, sectors, and asset classes. This exchange rate fund provides simple, low-cost access to actively managed portfolio build for various market conditions. And reason to invest in this one will be this following reason. First is a diversified solution for income and growth. So if you want income and growth, a one, this will do for you. And then 10% distribution rate paid monthly. Of course, you say right now is 9.15. So, but they aim for 10%, right? So diversification across asset classes, sectors, and geography. So unless other funds that only focus on one type of stock, this is a multi-asset. So multi-classes, and it has geography. Also, I'll show you the exposure for this ETF, and it's cost effective at 0% management fee at the ETF level. So this, don't get confused about zero management fee. This meaning the BMAX is tough. You are not gonna pay fee on this ETF BMAX, but remember it has underlying ETFs. So those ETFs you're paying fee. So combined together is about I think management becomes less than maybe 0.74 basis point altogether. And it has modest leverage. Of course, it does leverage to enhance that portfolio income, right? And then medium risk rating, it has medium risk. This ETF is for investor who it will be a better suited for this ETF is an investor who is seeking stable, enhanced monthly cash distribution, seeking opportunity for capital appreciation, and lower overall volatility or portfolio return that would otherwise be experienced by owning security or individual funds directly. So instead of having all those like individual funds, you just buy this one and call it a day. Can handle up and down of the market as usual. This is for any investor should have that. Inception of this fund, it came in October 20th, 2022. So it's been around for a while now, and it has returned greatly. And of course, this is Canadian fund, guys. This is not American fund. Outstanding share right now. There's a outstanding share and distribution. The last time they paid was about 10 cents. And now that's overall for this fund for people who are investing. I'll show you other things here. I'll show you the portfolio construction of this, because this is something you really have to watch. So now you can see geography here. 80% is North America, and then 18% is the Europe, 0.9 is Asia. Cash, it's pretty much flat, and then he has some bonds to it, right? He has fixed income right now is 27%, and the reason they might hold those bonds is because right now bonds are, if bonds pay a higher yield right now. I think that's why, Because I remember last year when I checked this ETF, it only had like a 10% bounce, but they jacked that up to 27% right now. The reason is because bonds right now pay high yield, and of course they because this is active, right, actively managed, so they jack up so to generate those more cash. I know you can see there's finance is 16%, information technology is only 15%, energy is about only 3%. So this is the sectors that they invest in. So it's not only, it's almost like a S&P 500, right? It's a pretty good. And you can see the first 25 holdings. It has this. This is a bond, Brompton grade fund here, 17%. They have a European dividend growth. They have North American financials a dividend. They have global. They have sustainable real estate. So bunch of ETF. So it's a fund of funds again. So on this funds level, you're paying fee on this one, but the BMAX itself you don't pay fee. But as I say, on aggregate, you end up paying about 0.74 basis point. So it's not that bad. Look at the performance. I've showed you earlier performance, but if you look at the max, right now we can see here BMAX return 31.78%. That's a pretty good. I think this is including the dividends that they invest. That's why it comes to 37. I mean, altogether combined with dividend you invested. But if you look at the 1 year to date, had return about 7%. 1 year has returned 15%. Since inception, it returned 16% annualized return. So it's 2023 was 11%. 22 was lowest, was only 6%. 23 was 11%, and of course this year has returned 7%. But on aggregate, altogether since inception has returned about 16%. So that's a good. Now, if we go to another metric, distribution. Now, this is what you're investing for, right? If you look at the distribution, it does pay monthly, which is a pretty good. Now they've distributed for a long time. If we look at the calendar year, for example, we can go to 2023. They never miss dividends. They've been paying all the time. And of course, distribution, you can see, is only about 10 cents, right? Total distribution is 10%, 10 cents. But then there is a combination of things here when it comes to your distribution. For example, we can see, let's look at one example. For example, March 31st, 2021. There was eligible dividend was 10 cents. When it comes to if you look at the return of capital, sometimes they put a return of capital about 8 cents, right? And then you can see it's 10 cents. So all in all, they have paid. So that dividend, some of these dividends, of course, include your return of capital. But some other people is going to complain about return of capital is returning your money. But when it comes to this fund, we've seen the performance has grown, even though they pay you some of the money that you receive, from your own capital, right? So all in all, it's pretty good fund. It's very solid and diversified. So is it time to buy this one? Yeah, if you're a Canadian investor who wants to invest in this type of ETFs, I think BMAX is one of the best. And also there's hyld from Hamilton. I'm gonna make a video soon about that review. So that's all, guys. I just wanna keep you an update on BMAX because I haven't covered this ETF for a while. Now, if you want to make more, if you have a suggestion of any other funds I should cover, just make sure you leave a comment below. So if it's the first time, just make sure to subscribe. And if you like this video, give me a like. Till we meet again next video. Bye bye.